Hello, welcome to the first video of this tutorial series. I'm shooting this video and loading it out of sequence because I realized after the first few videos that I kind of skipped the very first step, which I think is very important to talk about. So I created a playlist and put all the video in the right order. So for the new people, if this is your very first video watching my trading tutorial, go to the playlist and then you will see everything else in the right sequential order. Okay, I am a swing trader. I do invest a few things for the long term. I do hold some SPY QQQ ETF in a long-term portfolio that I don't trade. I enjoy trading. My advice to anyone that asks me about trading, the very first question that I ask them is if they have ever gambled, if they ever go to Vegas. Not that trading is exactly similar to going to Vegas, but there is a gambling aspect to it because you are playing the odds, high probability, you're trying to make educated guess. Nothing is a guarantee, right? So if you're the kind of person that don't like to gamble, have a bad feelings about losing money, don't like to lose money, don't like the feeling of losing money, or if you're the kind of person that don't have time, I fully understand that a lot of people have full-time jobs, have family, have obligations, have things that they are busy with, and they can't sit in front of the computers all day long like I can. I get that. So it's not for you. But if you are an investor, it's always good to understand how the market works in order to invest properly. It's to me, it's sometimes lazy for a lot of people that just throw money into the market because they're too lazy to follow the market. They can use all kind of excuses, but we all know it doesn't take a lot to study the market. It does not take a lot of time to make sure you have the right allocation of your 401k, right? So put in a little effort to help yourself make more money. And for those that are willing and have the time to trade or to invest, it is worthwhile to understand the market. You don't need to be a day trader, a swing trader, to understand technical analysis because entry points matter. Okay, entry points matter where you want to buy a stock. For example, I pull up a random chart of a stock that I have never traded, Schlumberger, oil servicing company. I have traded this sector many times, but I usually go with Halliburton. But Schlumberger, I have never traded. That's why this chart is clean. This is a 20 years chart. As you can see, left to right is pretty much dead money. If you put your money 20 years ago, even if you collect all the dividend, would you be happy? Entry points matter. Okay, so if you happen to like Halliburton and want to put it in a long-term portfolio, surely if you look at the chart, there's plenty of spot to buy that you could make money, and plenty of spot that you can sell that would not have you lose money. Look at this nasty 1, 2, 3, 4, 5 year slide. Okay, so I always cringe when I hear someone say, "Oh, just buy it, hold it, put it away. In the long run, the market always go up." The market usually go up over 3, 5, 10, 15, 20 years. That's the market, not the individual stock. If you are the kind of person that are too lazy or don't have time to busy with other things in life, buy an index fund. Buy the S&P 500, whether it's a Vanguard 500, S&P 500 index fund or buy the ETF, SPY. Just buy it and forget about it. That I agree with. But just don't buy an individual stock because your grandpa, your friend, your teacher, your whatever. The worst thing you can do is take buying tips from anyone. Okay? Even from me. The best thing you can do is educate yourself. And for this very first lesson, it's very important for you to understand the market, more so understand the economy. Yes, that's the part that I think a lot of people usually ignore, right? It's so easy to hear a stock recommendation from somebody on YouTube. Oh, buy Palantir. It's so undervalued. Or buy a different stock, so undervalued. I'm sure you hear that all the time. I usually have 3 words that I reply to any of those recommendations. Those 3 words are based on what? A lot of time, people on the internet, on YouTube, on CNBC, will spew out recommendation at the wrong time, or really something that I cringe whenever I hear recommendation from other people because they ignore everything else. Occasionally, you will hear people give a recommendation and back it up with macro reason or micro reason, which is a little bit better. So for you, whatever you want to buy, try to take a step back from the stock itself and say to yourself, is it the right environment to own something like this? Before you jump in. Here's a good example. Okay, I just show you Schlumberger, right? Dead money for 20 years. So yeah, would not be something I recommend anyone to buy it and forget about it. How about Apple? Right? You heard this on CNBC and Jim Cramer a million times. Oops, I put in the wrong one. I keep putting the wrong symbol. Apple. There we go. I hear this a million times on Jim Cramer. You should just buy it, don't trade it. Buy it, don't trade it. I'm sure those who know Jim Cramer well enough and have heard Jim Cramer over the last 10, 15 years on CNBC, or 20 years. I have heard Jim Cramer since 1999. Buy it, hold it, don't trade it. Let's take a look at something real quick. Let's take a look at the time frame. Custom. Let's take a look at how Apple did in 2008 through 2010. Okay. Pro 31 2010. So a full 3 years. Yes, from the bottom of the recession, Apple did great. No one gonna dispute that, right? But there was an ugly time, even for Apple. Okay? Even for Apple, it looked pretty nasty. Let's look at the percentage. Okay, take a look at this. Mind you, this include stock split, multiple stock splits, so it looked kind of wanky as far as the price. That's why I changed the percentage. But take a look. That's a pretty nasty decline, even for Apple through a recession. Does anybody know what main event happened in 2008 or near the end of 2007? Maybe some people here are too young to remember. The launch of the very first iPhone. Did that help? Did that prevent Apple from losing a lot of value through a recession? So it doesn't matter how great a company is, there is bad times. And sometimes it can last for like a year or longer, right? So yeah, I get how Jim Cramer would say, hold it, don't trade it. But I disagree. You can make a lot more money if you know when to get in and out of a stock. But that's me. The trader in me said that I can do it. That's why I don't just buy something and hold it. I like to trade. I enjoy trading. Sure, last year, my performance last year, slightly under the S&P 500, but overall, I was pretty happy with the return. So the lesson, the very first lesson here for you is to understand that, no matter what it is that you want to buy, you have to do your homework. You have to understand the macro environment. You have to understand what's going on with the economy. What sector is in favor? What sector is out of favor? What kind of time frame you have as far as your money? What kind of return you need to have in order to put the money to work? Because if you need the money in 6 months, not the best of time to put the money in the market, because the next 6 months can be very tough. Okay, so always have all these questions in your mind before you commit to doing anything, whether it's investing for the long term without trading, or do swing trading or short-term trading or day trading. You have to understand your risk tolerance. You have to understand your time horizon, and you have to understand the kind of time commitment you are willing to put into this. It's not hard, but it takes discipline and it takes a commitment. Okay, it's not willy-nilly buying things based on gut feeling, hunches, or recommendations from your Uber driver or whoever. Okay, you're on your own. Okay, this is something that you have to take ownership. So when you screwed up, you can look in the mirror and say, I screwed up. It's not about pointing fingers, blaming somebody else. You told me to buy this. No, do your homework, take ownership of what you're doing so that you learn something. Okay, the old saying, teach a man how to fish, you feed him for his lifetime, something like that. Yeah, this is what I hope to do with this series, is show people how I approach trading. You may disagree. You might watch a couple videos and say, phooey, I can do better listening to somebody else on YouTube that tell me when to buy, when to sell something. I don't need to do my homework. Fine, do that. But for those that are willing to make the commitment to invest on your own, if you're young, you have plenty of time. You have 30, 40 years. Okay, I've been doing this for almost 40 years. That's crazy to say. I bought my first stock when I was 18 years old, McDonald's. I'm 57. I will be 58 in November. So yeah, almost 40 years, okay? Sure, the first 10 years, forget it. Terrible return, okay? Outside of McDonald's, the rest was pretty bad. A lot of horrible stock pick, bad advices, and had no idea what I was doing. But slowly, it took time for me to get better and learn the process. And the last 10 years has been better and better. Since 2008, I would say, since the last Great Recession, I have gotten better and better and better. And I'm still learning. And hopefully you will learn some good lessons along the way here on my channel. And that's it for this very first video. Thank you for watching. Bye-bye.